The price action of WTI continued to move in an upward manner despite some hesitation early past week. In the current report, we intend to have a look at the state of the US oil market, yet also on an international level discuss factors on the demand and supply side that drive oil prices. To conclude the report, we will also provide a technical analysis of WTI's daily chart. We make a start of our review of the US oil market by noting that the number of active oil rigs in the US fell by 3 according to Baker Hughes. The release tended to imply an easing of demand which could weigh on oil prices. Yet on Tuesday, API reported a minus 2.3 million barrels drawdown of US oil inventories, implying some tightness in the US oil market. On the other hand, EIA reported an increase of US oil inventories of 3.2 million barrels, implying that aggregated demand was not able to catch up with production levels. The release contradicted APIs and implied a continuance of the slack reported past week in the US oil market. Overall, should the data align towards showing a tightening of the US oil market, we may see oil prices getting some support. On the demand side of the international oil market, we note that the expansion of economic activity for the manufacturing sectors of US and China. It was characteristic how the ISM manufacturing PMI figure for March surpassed the reading of 50 for the first time since October 2022, thus implying that growth has returned for the US manufacturing sector in the past month. The increase of economic activity in the US manufacturing sector was also confirmed by a beyond market expectations acceleration of the US factory orders for February. Similarly, we also had an improved reading for China's MBS manufacturing PMI indicator, also for March, showing an expansion of economic activity for the huge Chinese manufacturing sector. The increase of economic activity for the manufacturing sector could also inherently lead to an increase of oil demand at an international level, which in turn could drive oil prices higher. On the production side of the international oil market, we note that OPEC's Plus joint ministerial meeting practically resulted in the oil-producing organization maintaining its low production levels. It should be noted that Iran and Kazakhstan also pledged to achieve full conformity as to compensate for overproduction, while Russia will be basing its production cuts not on exports but on production as such, according to Reuters. In its statement following the meeting, OPEC Plus mentioned that participating countries with outstanding overproduced volumes for the months of January, February and March 2024 will submit their detailed compensation plans to the OPEC Secretariat by 30th of April 2024. All of the above, if combined with the possibility of increased demand, could lead to a substantial tightness of the international oil market that may push oil prices higher in the coming months. Tensions in the Middle East escalated in the past week as Iran blamed Israel for an airstrike of its embassy in Damascus, Syria, killing 7 people, among which also Mohammad Reza Zahedi, a top commander in Iran's Revolutionary Guards. Iran vowed to retaliate, hence we expect tensions to rise even further in the area. Please note that the above developments happened as the war of Gaza is ongoing with tens of thousands of civilian casualties among Palestinians. Moreover, Israel seems to be preparing for the possibility of a full-blown-out war in Lebanon with Hezbollah. The developments understandably intensified market worries for the supply side of the international oil market and may be an additional factor that could drive oil prices higher. Oil bulls continue to lead WTI's price, and the commodities price action has now reached the 85.55 resistance line, a level not seen since late October last year. We tend to maintain our bullish outlook for the commodities price, and we note that the 20, 50 and 100 moving averages are all pointing upwards, also supporting the idea of a bullish outlook. Yet we would also say a word of caution here, as the RSI indicator has surpassed the reading of 70, highlighting the strong bullish sentiment in the market for WTI, yet maybe also implying that the commodities price has reached overbought levels and may be ripe for a correction lower. Should the bulls maintain control of WTI's price action, we expect to see it breaking the 85.55 resistance line and take aim at the 89.60 resistance level. For a bearish outlook, we would require the commodities price to reverse direction to break the lower boundary of the current upward channel guiding WTI's price action, which could also be a first signal that the upward movement was interrupted. The WTI's price may continue lower and break the 80.20 support line and actively aim for the 76.50 support base. Thank you for tuning in to our financial news. From all of us here at IronFX, we wish you solid trading.